Well guys, here today in this video we're going to be talking about a stock as we do so often on this channel, and I'm actually really excited about this company. I just finished up my research yesterday and I do think this company has the potential to double my money in the coming years. Hope you guys enjoy these stock analysis videos. These videos do take a long time to make. They are by no means easy to make. Obviously, all the time reading 10Ks and 10Qs, that is very time consuming, never mind putting the video together itself. If you guys do enjoy these videos and you don't mind hitting that thumbs up button, I really do appreciate it. That helps the channel grow in a massive way. And I do appreciate every single one of you that turn that like button blue. And don't forget to subscribe to the channel if you want to see more stock news, stock analysis videos, and everything personal finance in between. Because as I've said in all of my past videos, we have more and more great content coming on this channel. So the stock we're going to be talking about in this video is Callaway, ticker symbol ELY. And as people who know me well, they know I'm a pretty frequent golfer. I started playing last year at the beginning of the season, and now I play pretty frequently, probably more than most people. If you guys know me well, you might think I play a little bit too much. So I do understand the business model of these golf companies pretty well, and I do understand the golf industry pretty well in general. I have been in this stock in the past, and something just triggered my interest again with this stock that recently just came about, and we're gonna get into that in a little bit. But first, let's just talk about Callaway and the business model as a whole first. Callaway is actually the #1 golf provider in this field, okay? They're #1 overall, they're #1 in golf clubs, and they're #2 in golf balls behind Titleist. So their business model, obviously, is golf balls. They sell golf balls, they sell golf clubs, they sell everything golf related in between. They were founded in 1982, and they actually went public 10 years later in 1992. But since then, they've expanded more from just the golf ball, golf club kind of industry, kind of field, I guess you can say, to more of the golf accessory field as well. They've expanded from their business to more evergreen accessories, which are more so like lifestyle products that are complementary to golf. In 2017, they acquired OGIO International, which is actually the leading manufacturer and distributor of premium storage gear of sports and personal use. They sell things like backpacks, travel bags, duffel bags, golf bags, etc. Everything in between of those things I just named. In 2017, they also acquired TravisMathew, which is the leading designer and distributor of premium golf and lifestyle, apparel, gear, and accessories. They sell things like hats, luggage, footwear, belts, etc., etc., etc. And in 2019, they acquired Jack Wolfskin, which they mainly sell soft goods products like jackets, trousers, footwear. They have a lot of different jackets and a lot of different clothing they sell for all different types of weather, not simply just golf-related weather, so it's good that they can diversify in this aspect. The company's also mainly based overseas, so in Europe, China, Canada, Japan, those type of countries. And most importantly, and this is what really interested me, they just acquired Topgolf a couple of weeks ago for a $2 billion deal, which surprised a lot of people because Topgolf was talking about going public on their own. And they very well might have if this virus did not break out. Keep that in mind. Remember that what I just said. Topgolf was supposed to go public on their own, and Callaway acquired them for $2 billion. That's going to be very important in this video in my thesis, and we are going to get into that in a little bit. But since Topgolf did not go public and Callaway was actually already an investor in Topgolf, I think they owned 14 or 16% of the company just based off those investments. Callaway basically just said, gimme, 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 like let me just buy it, I'll just take the whole business. And we are gonna leave that right there, that whole Topgolf thing. We're gonna leave it right there for now, but we're gonna come back to it. We're gonna talk about the company a little bit more, but we are gonna come back to the Topgolf thing, okay? So keep that in the back of your mind, we'll be back. So Callaway sells products in over 100 different countries worldwide, and basically their sales are split more or less down the middle of the United States and the non-United States sales. They sold 46%, 57%, and 52% of their sales in the United States in 2019, 18, and 17. And the main reason you saw that little bit of a dip in 2019 was because they acquired Jack Wolfskin, which obviously, as I mentioned before, is primarily overseas. And Callaway actually did just release their third quarter earnings about a week ago, guys. And they did struggle a little bit in the first two quarters, primarily due to the virus. But in the third quarter, they came back like, we back, baby, we back. They reported $476 million in net sales, a 12% increase year over year. Their net income of the third quarter was $52 million, or a 69% increase year over year. Earnings per share was 54 cents, a 69% increase again year over year. And adjusted EBITDA in the third quarter was $87 million. $87 million, a 53% increase compared to the $57 million in the third quarter of 2019. The world is embracing golf in a way that has led to a record quarter for the industry and our company, commented Chip Brewer, President and Chief Executive Officer of the company. Our golf business is now experiencing unprecedented demand, and our soft goods business is recovering significantly more quickly than we expected. Our third quarter results reflect this momentum. Our recent investments in our e-commerce capabilities have proven particularly valuable, showing strong growth across all of our business segments this year, including 108% growth in e-commerce for our apparel brands in Q3. Very interesting, guys, in my opinion. Very, very interesting. Now that we've gone over these third quarter results, let's take a quick pick at the balance sheet. As of their most recent earnings, which, as I said before, was not too long ago, just about a week or so, they have $286 million in cash and cash equivalents, $925 million in total current assets. Total assets, they have $1.9 billion. As for their liabilities, they have total current liabilities of $371 million. Their total debt was about $696 million. And their total liabilities is just under $1.3 billion. The company also does have a quick ratio of 1.62, which I find actually pretty attractive. And they also have a current ratio of 2.49, which I also find pretty attractive. As for the CEO, as I mentioned his name just a couple of seconds ago, Chip Brewer, Chip off the old block, as some people like to call him. And by some people, I mean me. And I just thought of that right now. He has been the CEO since 2012. He actually served as Topgolf's international director once upon a time. So he does know the Topgolf business pretty well, and I feel like he's going to be able to incorporate that into Callaway's business exceptionally. He is also on the National Golf Foundation's board, so he also knows the golf industry very well, which is important to note. He's not some newbie just jumping in here. And in addition, he was the CEO of Adam Golf beginning in 2012, which just emphasizes the point I just made. He knows the golf industry very well. Little fun fact, he does have an MBA from Harvard Hurricane. Anyway, let's move on. I'm never going to say that again. So we've gone over the Callaway business. We know they're the #1 provider in golf overall, the #1 in golf clubs, the #2 in golf balls, and that's all great and all, but why am I so excited about this company? Here's the thing. First off, their income's diversified, obviously, right? They're not just relying on one thing. They sell golf balls, golf clubs, they sell clothing, and not just golf clothing, they sell lifestyle clothing. So they have several sources of income, and it's diversified across the board, which I like to see. They're also attacking different markets. As I said, their sales are pretty much split between the United States and international. You know how I feel about the international markets, as we talked about in that Pinterest video. If they were primarily focusing on the international markets, I don't know how I would feel about this company. But I feel like it's well diversified, and I love to see that in a company because they just aren't reliant on one thing. So if one thing fails, say some other golf ball competitor comes in, they still have golf clubs, they still have clothing, they're still attacking different markets. It's very well diversified. Look at the metrics we have here. Price to sales ratio around 1, price to book ratio in the 2s, enterprise value revenue above 1. I like what I'm seeing here. The forward PE is a little bit high, but I think this is a little bit inflated due to their most recent earnings, because I did look at this not too long ago, and on Yahoo Finance, the forward PE was around 17, okay? So I do think this is a little bit inflated right now. I think a forward PE of 17 is a little bit more fair for this company right now. So let's get into the big reasons why I like this company now. There are two big reasons that really interest me in this company right now, okay? Two big ones. So here's the thing. In the fourth quarter, Callaway does not always do the best, mainly because winter time comes, a lot of golf courses close. I know here in Rhode Island, they close around Thanksgiving time, so they're not open year round, which obviously affects their business, but that's just part of the business. That's part of the golf business. Personally, I don't mind going out and playing golf if we get like a 50+ degree day, but a lot of people don't. A lot of people just don't have any desire to walk 9 holes or 18 holes in 50+ degree weather. So their business is obviously affected in that way. So here's the thing. Here in Rhode Island, golf courses were actually deemed essential. So when everything was shut down, they remained open. Why they were deemed essential, I could not tell you. I still do not have this answer. I have not heard anything from anyone why that happened, but it happened. But in a lot of states like Massachusetts, New York, Connecticut, surrounding states, they all closed down. But when things started to open back up again, what was one of the first things to open back up? Or in Rhode Island's case, stay open. Golf courses. Why? Because you can social distance, you can be outside, you can stay away from each other, which is social distancing, I suppose, but it's a safer environment than, say, like pickup basketball games of the Y. It's just safer. And then you had people who play golf maybe once or twice a year, they're playing once or twice a week. And then on top of that, you got people that only play 80+ degree weather and sunny. Now they're playing in 60+ degree weather and borderline rain. And why is this? Because there's nothing else to do. It's one of the only things that there was to do when things started to open back up, or in some states when everything was shut down. There just wasn't anything to do and people needed to get out of their houses. And on top of that, you got people in the boat where you don't play golf and you're like, I really need something to do. So you're like, I have all this money because I can't spend it anywhere because everything's closed. So I'm like, I might as well buy some golf clubs and just start learning how to play because there's nothing else to do. And maybe Johnny Smith, my friend Johnny Smith plays, or maybe Casey Kerr plays, you know. there's nothing to do, so people want to get out of their house. And where do they turn? The golf course, because it's open and it's safe. So that's one big part of my thesis. The other big part of my thesis, as we've mentioned before in this video, you knew this was coming, it's because of the Topgolf acquisition. Dylan Deere, golf.com. My first question is simple but elemental. What did Callaway see in this deal? What is Topgolf doing right that you guys wanted in on? Chip Brewer, Callaway CEO. In short, Dylan, Topgolf is the best thing that happened to golf since Tiger Woods. Tiger Woods. It's transforming the game, and it's going to be the biggest source of growth for our industry. That is a big, big statement from Chip Brewer right there. I mean, like, that is big. Like, when Tiger Woods first started playing golf on tour, he was a god. There's no other way to describe it. He was legitimately a god. If you go on YouTube and watch some of his greatest shots from like late 90s to like pre-2008 or so, he was a wizard. There's no other way to describe it. Like, he would just not be denied. So that's a big statement from Chip Brewer right there, like big. And he must see something really great in this Topgolf company that can really change Callaway's business. And I agree with him. I see the same exact thing. I have the same exact vision. So think of it this way, right? So Callaway sells, obviously, like we said several times in this video, golf balls, golf clubs. They also sell lifestyle clothing. But if you're not someone that's into golf or maybe doesn't follow sports, you might not know much about Callaway, the bottom line. And you also might not have any interest in buying any Callaway products because you might be under the stereotype that it's only golf-related products. So in other words, they're primarily attacking those that are golfers. But here's the thing. With the addition of Topgolf, they can attack a whole new audience. How many people do you know that don't play golf, but they'll go to the driving range every once in a while? How many people do you know that don't play golf, but they say, you guys go out and play, I'll meet you at the bar for some food and drinks afterwards? Do you know anyone like that? Because I guarantee you do, because I know some people that are like that. I know people that like to go to the driving range, they like to screw around, maybe just have some fun with a couple of friends, especially when everything's closed and there's nothing to do. I also know people that don't want to play golf, but they want to be there for the after party, let's say, the after party, the gathering, when there's nothing else to do. So they'll go meet you at the bar for dinner and some drinks, or lunch and some drinks, whatever it may be. So why is that important? This is important and huge because Callaway is going to be able to attack a whole different group of people that they might not otherwise have been able to attack before. But here's another thing I love about this Topgolf deal, okay? So as I said before, the Topgolf deal was about $2 billion. Tack on the debt they had, I'm not exactly sure what it was off the top of my head, but it was probably around 2.5 billion, we'll say in total. We'll tack on $500 million in debt. So 2.5 billion total, the entire deal. And remember, like I said before, Topgolf was considering going public on their own, and they very well might have if this virus did not break out. And when they were gonna go public, they were projected to be valued at about a $4 billion market cap. 4 billion, okay? Callaway's current market cap at the time of me filming this, their market cap is 1.5 billion, give or take. Meaning this company could easily double in market cap size any day, like right now, because there's essentially 1.5 billion that they gained in equity of that Topgolf deal. I personally feel this company's market cap should minimum be $3 billion. Absolute minimum, and I feel like it should be higher, like 4 billion, okay? I feel like this company is going to continue to change the golf game, and it's going to bring an entire new audience to the game of golf. But as always, this is just my opinion, so make sure you guys are doing your own research, or doing your own due diligence, because I am in no way a financial advisor. I'm just some random guy talking to a camera in my living room that for some reason you are watching. And if you like him, make sure to like the video, please. That really helps me out. So with that said, guys, that's going to be it for this video. Thank you so much for watching. I really appreciate it. If you like this video, remember to drop a like on the video. That really helps the channel grow, and I appreciate every single one of you that is part of the thumbs up gang. Also, remember to subscribe to the channel. That also really helps the channel grow, and we are trying to get to 200 subscribers by the end of 2020. And as always, most importantly, let me know in the comments down below what you think of Callaway, if you're buying it, if you're selling it, if you're holding it, what you think of it, and what you think of this Topgolf deal. And I will see you guys in the next video.